Hello everybody, Nick McDonald speaking. Thanks for joining us for this week's ICE commentary videos. Looking here at the dollar index, and before I begin, just to mention that it is Easter week. I'm sure everybody is very aware of that, but it does mean some limited trading hours towards the end of this week and the start of next week. And it also means that we will be taking a break on ICE commentary, and we'll be away on Easter Monday and returning the following week. So just a 1 week break before you'll see us on the next video. Coming now and looking at the charts. So last week I was looking at the 78.50 low down here, which corresponds to this weekly low here, and saying this will be the point where we get the trend confirmation. So we've got the lower high in the weekly. We really need to see the breakdown through there. Well, ultimately now we even have this smaller downtrend going on in the daily with some lower highs and lower lows just in the shorter part of the trend here. So daily is looking down, although it's a very short-term downtrend. We'll come and look at the monthly in a minute. Weekly still not quite in agreement. I was thinking we'd come down and test this level, and also didn't expect 79 to act as too much resistance in the way, or sorry, in this case, too much support in the way. As it happens, we've come down and we've bounced twice off 79. So 79 is proving a little bit stubborn for price to get through, but nonetheless we've moved down, we've pulled up, we came back in, touched the averages, came down again. It's a bit of a rejection candle there on Friday, but still looking like it should decline, and certainly whether it does or not, this is still the key point, 78.50. Not because it's a major support level, but simply because it is the point where the weekly chart will be back in agreement with both the daily and the monthly. So coming in quickly, looking at that monthly chart, nothing really has changed. We've come down, we've come up, we've made lower highs all the way through here, as we've made lower lows already. The candles have pulled into the averages. They're very bearish. In fact, 3 very bearish candles there. Even this current month, it tried to get bullish, but it's just got more and more bearish as the month has gone on. So it is a big rejection candle. And if we close the month anything like this, let alone down below last month's lows, it will be looking very bearish indeed. And I think it's just a matter of time before the dollar gets back into its rhythm of the downtrend. And actually, we see a good few months in the same direction, because we haven't had that for a while. We've had these months up, and we've had up and then down, and then small months up and small months down. I'm expecting to come back into some agreement and see some decent months in one direction again. And at the moment, the probabilities for that are certainly swaying to the downside. So monthly is down, weekly will be down when it breaks this level, daily is in a short-term downtrend and really just waiting for that level to be broken. In the meantime, as always, looking for trading opportunities around the key levels like 79 and 80, depending on which level is tested next. You've often seen me actually come in and draw fib lines in times like this, from the high down to the low, see if there's any clusters, and you'll see here that even 50% clustering with a big number of 80, clustering with a support and resistance level, that's the kind of place I'd look for a retracement to be joining the downtrend. Equally, any move below 79 and a pullback into 79, I would be doing the same thing. Quickly looking at a couple of the currencies, most of them actually, well, I've just been through and done a scan of them, and just a couple I want to touch on. So most of them not worth saying too much about this week, but euro, dollar, certainly continues to look bullish here, continues to be pretty much the same, inverted view of the dollar index, looking like coming up here and just testing these highs. So we should be getting up and testing 135, which is going to be dragging the dollar index down as we do so, and then from there we'll see, but certainly this is a weekly uptrend now as well on euro dollar, and a breakout through here will be quite significant. Just quickly looking at dollar Swiss. Dollar Swiss is a funny one right now because of the intervention in the from the Swiss Central Bank, the Swiss National Bank. But what we have here is a very nice monthly downtrend. Let's just zoom out here and get this into some perspective. We've moved down and pulled into the averages so many times, and we had this big move down here, big pullback in. This was on the intervention, in fact, this big move up. Now we've got these bearish candles, and it's very, very much starting to look like the point where this will turn back over. So whether or not it does, or whether or not it's held up by intervention, it is certainly looking very, very bearish, and certainly showing US dollar weakness. Whether or not the Swiss National Bank allow it to happen, we're yet to see, but it still gives me comfort of my, or gives me backing of my decision to be bearish on the US dollar, because it is looking bearish here against the Swiss franc, and usually very closely correlated to the dollar index. And lastly, just looking at dollar yen, because this was obviously the one which was showing the real dollar strength versus a weak Japanese yen. Even here on the daily chart, we came down, we actually made a lower high, we've actually even made a lower low. Even these last two candles are bullish, we've actually got a lower high and a lower low now. So it looks like it could pull back further. It still is a very strong looking chart, and this weekly chart is still very bullish, except that in the short term it's still due a pullback that bit further, maybe into 81 or 80, and this dollar weakness here is still likely to weigh obviously downward on the US dollar index. So just coming right back and just summing things up on the dollar index. No major influence from those spot currencies, but certainly the big ones there are just backing up the bearish looking dollar index. It's likely to move down from here. It's likely to come down and test this level, likely to be broken. If I'm wrong, of course, just watching these key levels on the way up, things like 80, if it starts to rally from here, I'd expect it to stall at 80, but a break up through there would be, we'd have to start to reassess the charts again. But for now, 80 is key to the upside. If we retrace, 79 is obviously a level we've got to break to the downside. 78.50 will confirm the downtrend, and from there it will be looking for trading opportunities to join the downtrend as we come down and test those lower levels towards 75 and even 74. Hope that helps everybody. Have an absolutely fantastic Easter break, and I look forward to speaking to you all in around about 2 weeks' time.